I am Robert, and welcome to my channel, where I talk about everything automated algorithmic trading, or simply algo trading. As we wait for the market to open very shortly, let's take a brief look at last week and talk about what happened in relation to the overall pattern we have been seeing lately. Last week, the 16th week of the year, was really quite slow compared to its previous week. While there was some good opportunities and the bulls and the bears really battled it out, as we can see on the chart, it was nothing compared to the previous week in terms of volatility and profitability. Last week was a slow week and a quiet week, reasonably speaking. And I personally think that is showing signs of exhaustion in just how much the previous weeks have pushed for volatility. A bit of a sideways market, really, when you look at where the market currently is seated in terms of the frequency weighted count and the order book volumes. We've also noticed that the overall range of the market has shrunk about 20 to 30 pips. So things are beginning to squeeze down and narrow down, perhaps getting ready for a breakout in one way or the other. Although I don't necessarily see the order book having enough evidence for a downward price push, I do think that it does need to be a cautious watch, simply because, as we see from last week, when the bears really leveraged out and began pushing aggressively, particularly on Friday. As we can see, Friday of the previous week compared to Friday of last week, very much differences in terms of where the bulls and the bears sat. A significant difference in volatility, and that really is a stepping stone in terms of why I think the market may be starting to show signs of exhaustion. I think things might slow down a little bit in terms of the range that we are seeing, particularly when you look at the orange lines of the chart, which represent the volume of the order book itself. Taking out liquidity and transactions in just that volume range, it's considerably narrow. So I think we're going to see this narrow range continue for the week coming. But overall, when you look at where the prices have actually been, we can see that it also is a bit squeezed compared to where it's previously been. Volatility being the way it is, we can expect an average rough movement within a 15 to 16 pip range, looking at the market as it is from the highest to the lowest. That's a reasonable amount of profitability, but it's still a clear indicator that the market may have something more coming. So it's a cautious tale that we need to be aware of as we wait for the market to open. Overall, I think the market might gap up a little bit for Monday's session, but I don't really think we're going to see the kind of activity we saw in previous weeks. I think this coming week is going to be like last week. There will be some action, there will be some pushback, but it's not going to be insane like week 15. Maybe more like week 14, where you might have one day of solid, really heavy movement, but then the rest of the week is going to kind of be lackluster. We'll see though, and as always, don't try to predict a market. Just flow with it. Let me know how your week was. Did you do well last week? Or did you get bit by either side that went against you? Share your thoughts. Thank you for watching, and until next time.